Uncertainty around trade and the economy is injecting volatility into the markets. How should investors be thinking about portfolio strategy in an environment like this? Joining us now to discuss is Brad Simpson, Chief Wealth Strategist, TD Wealth. Brad, you and I always speak with each other, it seems, in interesting times. These, to put it mildly, are interesting times. What should our mindset be?
Well, hi, Greg. Indeed. Thanks for having me. And you're right. Seems like maybe we just shouldn't have me on anymore because often there's a strong correlation. Note to market: don't have chief strategist on.
It's me. It's not you. It's me. It's me.
Yeah. How about that intro? So I think maybe an interesting way to start our conversation today is maybe with this idea that, and we could have almost like a tracker to how many times we're going to say uncertainty today. And I think that maybe the perfect place for us to start our discussion is to say that the only certainty is that we're going to continue to have an awful lot of uncertainty. And so maybe just kind of circling all this out as we've seen over the last week. You kind of recall your intro on the way in, kind of going through the market where markets are right now. Earlier today, I saw the Nasdaq was almost down 4%, and so it's a little bit or better at this point. But I think maybe more importantly, is after seeing volatility, in your 10s to 15s through the VIX for a long time, we're starting to see a breakout above the mid 20s. And this kind of a persistent mid 20s for the VIX is consistent with a heightened risk or concern about recession risk. And I think indeed that's where a lot of this volatility we're seeing right now, where it's coming from. And of course, the lightning rod for all of this concern is tariffs. And the trade war that we're seeing, and I think I'm maybe going to start our discussion today trying to actually look at a little bit of this through the kind of the Canadian standpoint, how Canadians are looking at this, and I thought maybe a good way to put context to this. I brought a chart along which I think frames right now how kind of Canadians are feeling incredibly well. And so really what we're looking at here are two different things. Looking at the black line here is the economic policy uncertainty. And this is from a Harvard study which tracks the frequency of the references of uncertainty in newspapers and magazine and media in Canada. And you can see this just absolute spike just directly up there in the last few months. And then on the green line, what we're looking at is the business barometer index, so looking at business confidence. And so you kind of see that you see the average Canadian, you see the concern boosting up there and really to a 40-year high. And on the flip side, when we're looking at the CFIB business barometer, it was 49.5 in its most recent measure, off of 54.5 that we saw a little bit. And when we look and dig into that a little bit, you saw the decline in this chart of manufacturing and retail and wholesale and transportation all headed downwards there. And remember, these are sentiment. This is sentiment. It's talking about how are you feeling about things. And so it's almost as if as Canadian people, went to bed one night and they woke up the next morning and the whole world was different. And that I think is a kind of the key of how we're looking at things. And this shouldn't be a big surprise. I think everybody is in the middle of this, but our whole theme for the quarter is from our portfolio strategy quarterlies. Things have changed, and indeed that's what we're seeing here in the way Canadians are looking at things.
Yeah, okay, it's a very interesting view of what's happening here at home. What does all this mean outside of Canada?
Well, of course, this isn't a Canadian phenomena. It's just it's when you look at the data and you look at the reaction to it, it's more enhanced in Canada, which makes sense. We're so intertwined with the U.S. economy. We're right on their border, and so much of what is happening, we are kind of the direct and brunt of it. But when you look at the rest of the world, they're experiencing policy and trade uncertainty as well. And so the market's reacting, I think I brought a chart along again, which I really wanted to frame just the beginning of our discussion here. And so what we're looking at here is again, but through the first one we were looking at Canadian economic policy uncertainty, and the green line here, now we're looking at it through a global perspective, and it shouldn't be a big surprise. We're seeing that kind of spike up in green there. And what we're seeing is the world trade uncertainty. We're seeing that spike as well, and it sort of gives you the feedback loops happening here. Now, what we're seeing in the gray box was looking at the first Trump presidency, and you also saw these concerns spike during this time. Now, during that time, excuse me, and of course, when we look here, we're seeing it again. And of course, from this time is certainly more extreme, and so we're starting to see that spike is more extreme as well. Now, I don't want to lay all this on tariffs. You are seeing starting the concerns of inflation resurfacing worldwide again. We've seen some recent CPI readings that indicate that it's starting to pick up a little bit. Again, I'm saying a little bit here. And investors are really grappling with all this uncertainty, and then you throw investors grappling with geopolitical uncertainty, and you get a pretty good idea how people are feeling about things.
Okay, we have a pretty good feeling from that work there, and from what you've laid out about how we're feeling about things. We feel it in our bones every day. What does it all mean for the financial markets?
Well, I think that that one's going to be probably we're going to dig into the rest of the call is first and foremost is that if you kind of looked at it, like right now we're seeing a small correction in the market, and quite frankly it's something that if you read our year ahead document that we published back in late December. We were saying we were expecting a equity market correction in anyone around 10%. So, like for that as an expectation, we're still a ways away from that, and that would be something you would kind of expect in after being such a long time not having one. So, the next part I would like to say is our look at it is that if you look at the environment and you look at what's going on in financial markets, it's actually pretty remarkable and really rolling out a little bit of the way we thought it would. This is a market that is starting to increasingly be focused on the business cycle. And with that, you've seen sort of year to date, you've seen equity markets, you've seen financials and materials and energy, which are sensitive to the business cycle. We've seen a little bit of move downwards in those in the last few days, as you were showing your JP Morgan on the way in. But all in all, they've been doing quite well so far this year. And I think a lot of that is this is a market that is also, with all this noise, is far more focused on the business cycle than the noise than really what you think, and I think that and we think that's actually a real positive.
Okay, we've discussed a lot of big themes there. If you had to boil it down to one thing, what's the one thing that you want advisors, clients to know amid all this uncertainty, Brad?
I really think the starting point is that first of all, among all this uncertainties, there continues to be opportunities out there. And, and our team continues to identify ways to allocate capital, and we're doing so every day. And the reason we can do that is the bottom line is that we're running really broadly diversified investment portfolios and using really the whole spectrum of asset classes, but also using private capital, using hedging strategies. And I think really that if investors are doing that, we think it's going to make all the difference in the world, and we think this really is a market that is really well structured for that kind of investment management.